Have you ever noticed that even when the news says inflation is going down, the prices at the grocery store don't seem to get the memo? You're not alone, and you're not crazy for thinking that. Today, we're going to dive deep into this puzzle and figure out why prices seem to have a one-way ticket up, but rarely come back down. First, let's get on the same page about what inflation actually is. Think of inflation as the speed limit for price increases. When we hear that inflation is, say, 3%, it doesn't mean prices are falling. It means that, on average, prices are still rising, just at a slower pace than before, maybe when it was 5% or 7%. A lower inflation rate is like easing your foot off the gas pedal, not slamming on the brakes or throwing the car in reverse. The car is still moving forward, just not as fast. For prices to actually drop, we'd need something called deflation. Deflation is when the inflation rate goes negative. So instead of 3%, it would be minus 1%. This is a completely different scenario and, believe it or not, it's something economists generally try to avoid. While lower prices sound amazing on the surface, widespread deflation can actually be a sign of a very weak economy, where people stop spending because they expect prices to fall even further. This can lead to a vicious cycle of job losses and economic stagnation. So, a little bit of inflation is actually considered healthy for an economy. Now, let's talk about the real star of the show. Sticky prices. This is the economic term for why prices are quick to rise but slow to fall. Imagine you own a coffee shop. Over the past year, the cost of your coffee beans, milk, paper cups, and even the rent for your shop has gone up. You've also had to give your employees a raise to keep up with the cost of living. To cover all these new expenses and still make a profit, you had to raise the price of your latte from $4 to $5. Then, the news announces that inflation is slowing down. The cost of your coffee beans might stop increasing so rapidly, but they haven't gone back to their old price. Your rent is definitely not going down, and you can't exactly ask your employees to take a pay cut, can you? Your costs are locked in at this new, higher level. So, you keep your latte at $5. Your price has become sticky. This isn't just about your local coffee shop. It happens across the entire economy. Businesses face what are called menu costs. This is a quirky name for the real costs associated with changing prices. It's not just about printing new menus. For a large supermarket, it means updating thousands of price tags, changing online listings, and reprogramming checkout systems. For a big online retailer, it involves significant digital updates. These things take time and money. So, unless their costs drop significantly and for a sustained period, businesses often find it easier to just leave prices as they are. Another big factor is wages. Just like our coffee shop example, wages are very sticky downwards. Most of us would not be happy if our boss told us we were getting a pay cut, even if the general cost of living stopped rising as fast. Since labor is one of the biggest costs for any business, and those costs rarely go down, companies have little room to lower the prices of the goods and services they sell. They've baked those higher labor costs into their pricing structure. Let's also consider the psychology of it all. We, as consumers, have expectations. We've become accustomed to prices gradually increasing over time. We might grumble about it, but we're not shocked. Because of this, businesses know they can raise prices incrementally without causing a massive uproar. However, lowering prices sends a different signal. It might make customers wonder if something is wrong with the product or if the company is in trouble. Also, if one company lowers its prices, it could trigger a price war with competitors, where everyone keeps cutting prices to win customers, and in the end, nobody makes a profit. Most businesses would rather avoid that kind of race to the bottom. So, where do we see prices actually fall? It does happen, but usually in specific sectors. Think about technology. Your smartphone today is infinitely more powerful than a computer from 20 years ago that would have cost a fortune. Prices for electronics often fall due to rapid technological advancements and fierce competition. We also see seasonal discounts, like for winter coats in the spring, or sales on certain food items when there's a surplus harvest. But these are exceptions, not the rule for the economy as a whole. These are targeted price drops, not the widespread deflation we talked about earlier. So, to recap, what's the big picture? When you hear that inflation is slowing down, celebrate it as good news. It means the pressure on your wallet isn't increasing as fast as it was. It means your purchasing power is becoming more stable, but don't expect a rollback on price tags across the board. The fundamental costs for businesses, from wages to rent to materials, are often stuck at their new, higher levels. This stickiness is the main reason why the price elevator goes up, but the down button seems to be permanently out of order. It's a complex dance between economic policy, business costs, and human psychology. Understanding this doesn't make that $5 latte any cheaper, but hopefully, it makes the price a little easier to understand. The goal of central banks isn't to make things cheaper than they were last year. It's to create a stable and predictable economic environment where prices rise slowly and steadily, not in wild, unpredictable swings. So the next time you re at the checkout and wondering why that carton of milk costs what it does, remember the journey it took to get there. It's a story of sticky wages, menu costs, and the delicate balance of a massive global economy. Thanks for sticking with me through that deep dive. If you found this explanation helpful, give this video a thumbs up and consider subscribing for more content that breaks down the big economic questions that affect our daily lives. Drop a comment below with any other economic mysteries you'd like us to solve. See you in the next one.